What is a sale? What is economic reality in a sale transaction? What are key features in a sale transaction? Sale is an activity where one member delivers goods, services to another member, in exchange for money as per agreed terms. Sale is an activity of selling something. Quran says, Allah has permitted trading and prohibited riba. There are minimum two parties in the activity of the sale of goods or services. First reality. There was no partnership relationship among parties before the sale transaction, and there shall be no partnership relationship after the sale transaction. The sale activity does not create any sort of partnership of any kind between the parties. Second, it means the liability is several among parties of the sale. The third economic reality. The parties are open for negotiations on terms of sale without any compulsion in a competitive market. Negotiations are mutual. The buyer cannot be forced to buy at the terms of the seller in the open market. The buyer has a choice not to buy if the price or terms are not acceptable to him. The fourth economic reality. The parties are after negotiations agreed on terms of sale, it will be a value-to-value negotiation. Consideration agreed between the parties shall be a real market value of goods, services against the agreed consideration among the parties. The fifth economic reality. The parties before the sales owned the ownership of the equivalent agreed value of goods and the value of the medium of exchange. Hence, after agreeing on a sale, there is an exchange of value to value among parties. It means both parties get a value in exchange. There is no decrease for anybody. Whatever price, consideration agreed is exchanged among parties. The sixth economic reality. The parties transfer ownership of their respective asset, resources, to the other party. The buyer pays cash or delivers a payment instrument, and the seller pays for goods, services. Economic justice prevailed in real terms. The transfer of ownership at spot without any risk or liability on each other. However, a credit sale has two transactions. One is a sale transaction and another one is a loan transaction, where a loan agreement is accepted by the seller as a payment instrument. The seventh economic reality. In a sale transaction, the exchange of ownership along with the exchange of risks at spot. The eighth economic reality. In a sale transaction, the benefits are also exchanged at spot along with the exchange of ownership. The ninth economic reality. In a sale transaction, upon exchange of value to value, the parties are satisfied with their trade as per particular, certain economic circumstances for both the parties. The 10th economic reality. The seller has sold its goods, services against fair value received and earned by him. This is most probably an increase for the seller in the shape of profit, or it shall be a recovery of the value of goods sold in the prevailing economic environments. The consideration received by the seller is a justified value of goods accepted by the seller. At the same time, the value of goods purchased by the buyer is equivalent to the value of money paid by the buyer. Hence, both parties are satisfied. There is no economic injustice. The 11th economic reality. The seller and the buyer enter into the sale transaction in a certain economic environment without any risk of future uncertainty. The 12th economic reality. The seller and the buyer have their own profit and loss accounts and risks. The seller sold its goods and services. The buyer will use goods or services and will sell the goods to a third party to generate profit or loss depending upon its mutual negotiations with the third party. The seller earns benefits on spot. The buyer will get with a hope to earn on consumption or resale of purchased goods, services. The 13th economic reality. The rights of the parties are secured in terms of equal exchange. The buyer should be satisfied with the quality and quantity of the goods or the quality of service. Satisfaction of the buyer is important, and in case of goods are defective, it is not sale, it is fraud. If it is not a value-to-value transaction, then it is a fraud. It cannot be called a sale transaction. However, in credit sale, the medium of exchange is the payment instrument in the shape of a loan agreement signed by the buyer. If this is acceptable to the seller, then this is the medium of exchange. Otherwise, there is no sale because there is no payment instrument. There is justice in the execution of sale because of the exchange of assets, goods against money, along with risks among the parties of trade. In fact, everybody is satisfied after the execution of sale. The economic reality in sale has been explained by Mr. Shahzad Shawkat in Federal Sharia Court during February 2022 and March 2022. The main argument from Mr. Shawkat: we need to understand economic reality in a sale transaction. This will highlight the facts and economic reality in interest-based transactions.